quantitative.
Rahul, your voice is cracking like.
No, we are not giving quantitative numbers of growth. But see, currently we have 200,000 liter fermentation capacity in Bangalore. We are adding 400,000 liters in Vizag, and that's in phase 1. We'll add another 5,000-600,000 liters in phase 2. So we keep on adding large capacity for our traditional fermentation. In small molecule, we continue to invest ahead of the requirement. So it is difficult to we have a visibility, but we don't want to confuse everyone by giving our visibility as a guidance. So we can say the growth looks interesting. That is the reason we are investing ahead of capacity.
Excellent. Thank you so much. That's it from my side.
Thank you. Our next question comes from the line of Chandramouli R. from Tech Fund Capital. Please go ahead.
Thank you for the opportunity, and season's greetings to every one of you. I'm glad about the performance of Lauruslab this quarter. But what is concerning me as an investor is I make a comparison with other players. Like last quarter also I had a question about, let's say, the growth of DV's performance. So is my capital investment between the CDMO players and in the industry, I find relatively Laurus is not getting the return on investment quickly as others are. So why is there a delay in getting the orders from the innovators, or are we not investing in the capacities in where the demand is growing incrementally? So I would like some amount of clarity on this.
The modalities of CMO offerings have changed significantly, which demands very early and large amount of capex required. That's the one factor contributing. Investments are being done well in advance, whereas revenues are coming later. Another big change is you get a phase 3 molecule, you do validation and create a large capacity and wait for NDA submission and approval and all. So from late stage supplies to commercial supplies, there is a gap of almost 18 to 24 months. So during that period, your utilization will be very, very low. So if you look at our traction in CDMO, is not 10-year-old. We have significant traction happened in the last 3-4 years. So we are catching up with our investments and projects, commercial sales and all. So this will continue for a few more years, and then we will be back on track with our return on capital to a good level. Yeah.
Okay. Thank you, Dr. Chava. That's all from my end.
Okay.
Thank you. Ladies and gentlemen, in order to ensure that we are able to address questions from all the participants in the conference, please limit yourselves to 2 questions per participant. If you have any follow-up questions, you can rejoin the queue. Our next question comes from the line of Viraj Shah from PGIM. Please go ahead.
Hi, thanks for the opportunity. So I have just one question on CAPEX front. In last quarter, you had guided a CAPEX of 5,000 crores for 5 years. And if I see your presentation, it's $600 million, which comes to around 5,000 crores again, but it's for 8 years. So are we reducing or extending the tenure of CAPEX in this? If you could help me out with those numbers.
So that $600 million CAPEX in the new 530-acre complex. That has nothing to do with the CAPEX in the existing land bank.
So the total CAPEX remains the same. That is 5,000 crores at least for the next 5 years. It remains constant, right?
Yes. Yeah. You are right.
Okay. Thank you. That's it from my side.
Thank you.
Thank you. Our next question comes from the line of Madhav from Fidelity. Please go ahead.
Hi, good evening. Thank you so much for your time. I just want to clarify on the ARV formulations business. So if I look at 1H last year, if I have my numbers right, we had done about 350-400 odd crores of revenue, and this is about 600 crores plus in first half this year. I think sir maintained that we will be in the same band of 2,500 crores plus or minus 200 crores. So this jump up is more in terms of the shipment timelines, or have we sort of like doing more tenders outside of what we usually used to do? Like what's happening here? Like because the number is quite strong first half to first half. So just wanted to check what's happening there.
I would say two reasons contributing to that increase. Shift in supplies is one reason. The second reason, there is slight increase in demand.
Okay. The shift in supplies means the timing of the shipment?
Timing of the shipments. And there is a slight increase in the overall demand also.
Okay. And then this is in our existing markets itself, like which we were servicing earlier, where there's been an increase in demand, or have we doing some newer markets?
I think increasing demand for our existing customers, I'll put it that way. So more demand came from API rather than formulations.
Okay. Because the ARV formulations is where seems like there's been a big jump. So which is why I wanted to check. The API still seems quite stable year over year, in line with your guidance of this.
Dr. Satya indicated already 2,500 plus or minus 100 to 200 crore. That was indicated, and then we are in that statement. There's no change there. Probably, as we are indicating, API and formulation may be interchangeable for a few quarters.
Sure. Got it. Okay. And so the second question was on the newer modalities which we're investing in, like ADCs, for example. Could you just give some qualitative sense in terms of what kind of pipeline are we doing? Is it more early stage work, or do we have, getting some late stage projects here? Just any qualitative sense will be helpful. And could you give a little bit more detail about this investment that we've done in a platform for ADCs? Some more detail there as well, please. Thank you.
In the ADCs, as a company, we already make payloads and linkers and supply for multiple programs to one big pharma. Because of that, we wanted to have capabilities to do bioconjugation, purification, and fill finish. To gain that, we decided to invest in a company who is developing novel ADCs. So that partner will give us conjugation, purification, and fill finish technology, and we will make their clinical programs. I think that much I can share right now. Yeah, they have multiple programs. They are about to file IND for one of the molecules. Once they file IND, they will do tech transfer, and we will manufacture here.
And our investment is only $2 million.
We only invested $2 million, Madhav.
Okay, in this company. Okay. Got it. Understood. And so the IND which they filed for the one molecule, like for this one, we plan to do payload and linker, or we plan to do like the integrated ADC, like if you could share some
integrated ADC. Integrated ADC.
Got it. All right. Great. Thank you.
Thank you. Our next question comes from the line of Manoj Baheti from Carnelian. Please go ahead.
Hi. Good evening, Dr. Chava. Good evening, Ravi. First of all, congratulations on good set of numbers. A couple of questions. I just need some clarification on CapEx. See, earlier 5,000 crore CapEx was on our existing land bank. Now with this 532 acres of land which we got, and where you put $600 million of investment over next 8 years, is it over and above our existing plan, or total we should consider 5,400 crores or 5,500 crores over 8 years?
I think over 8 years you can consider maybe 8,000 crores.
So over 8 years it will be 8,000 crores, right?
Around. See, it is 8 years is too difficult to predict. So if the opportunity comes, we are prepared to invest more. So we are not limited to this number. So current guesstimate is we need about $600 million in the new 530 acres. And current projects demand about 1,000 crores per year investment. If there is a massive project coming, we need more investment, we are happy to invest. Yeah. This is our understanding as of today. Yeah.
Okay. Got it. And see, right now our CDMO run rate is almost 500 crores a quarter. I just wanted to get some color on what kind of capacity which we have, current capacity can take us up to what level of CDMO sales, some perspective on that, and also on this additional investment. Can we consider at least 60 to 70% of this incremental investments will be towards CDMO?
I would say majority. I will leave at that stage. And see, our capacities initially what we created are fungible between generics and CDMO. So right now we are allocating certain capacities, but we are started building dedicated capacities for CDMO. And we can't give you the capacity utilization of our CDMO assets.
I think what we have to do is we have indicated before and even in the investor presentation, our fixed assets turnover ratio is around 0.9 today, and our average what we have achieved before is 1.1. I think that is the point of fixed assets you need to bank on the growth what we can achieve in the coming years.
But Ravi, at this run rate of growth, will you be soon outgrowing your capacity? Whether your growth will be constrained by your capacity, that is one perspective I wanted to understand from you. Yeah.
No. We are adding capacities to meet our expected customer demands, Manoj. We are conscious of that. So, yeah.
Okay. Great. Thanks for taking my question and wish you good.
Thank you. Our next question comes from the line of Praful Kumar from Diamond Asia. Please go ahead. Praful sir, your line is unmuted. Please proceed with your question.
Sorry, am I audible?
Yes, sir, you're audible now. Please go ahead.
Yeah, sir, many congratulations for your superb delivery, consistent delivery for the last many quarters now. We recently saw some figure observations from US FDA and the research plant. Does that add to more tailwinds for us on the ARV side, which is already delivering strong numbers?
Can you repeat the question?
So there were US FDA observations on. So there were US FDA observations on retro plans one of the competitors on the ARV side. Have you seen any incremental requests or inquiries on the ARV business in terms of products?
This is very recent. We haven't seen any disruptions as yet.
Okay. Okay. And secondly, sir, is there any one last question on margins, which has been already very strong? Is there a scope of as operating leverage kicks in, margins to incrementally get better next 12 to 24 months for us?
Yeah, obviously yes.
Okay. Thank you, sir.
Thank you.
Thank you.
Thank you. Our next question comes from the line of Anubhav Sahu from Macpro Research. Please go ahead.
Hello. Yeah, thanks for this. Couple of questions. First, on the CDMO business for animal health and crop protection and markets. So, Doctor, wanted to understand how is the commercial ramp-up of the facilities dedicated to this? And in Q2, is there any material contribution from these two end markets? And if you could also, provide some understanding what would be the capacity utilization of these facilities.
Krishna, would you like to answer? The animal health and crop science.
Yeah. Firstly, on the crop science side of things, there was not any significant material contribution from the crop science side of things. Of course, it needs some amount of time to go through the whole qualification filing activities for our partners. which we expect to ramp up in the coming quarters. But nonetheless, there was no significant contribution from the crop science side of things for this quarter. From an animal health side of things, one particular asset that we currently manage, we've started doing the commercial supplies itself, but the dedicated animal health site is still undergoing validations and filings. And as and when the filings are successfully approved for our partner, we expect to start the supplies. But predominantly, validations are going on with one commercial asset that's being supplied already.
Okay. So largely for these two segments, the validation qualification stage is what we are in. And the CMO opportunity, if I recollect, for the animal health, that's already done with, right? And it's not, there's no contribution for that in this Q2, or is there?
It is there. So from the animal side of things, it is there. But, it is. Crop sciences, no significant, almost nothing there.
Okay, understood. And thanks. And my second question is on the positioning, or let's say, are we positioning for GLP-1 drugs opportunity in any way in the value chain? I know we have interest in peptides, but particularly GLP-1 drugs value chain, are we participating, or do we plan to participate?
It's very early to comment on that, but as you mentioned, we have capabilities in that area. Yeah.
Okay, understood. Thank you. Thanks a lot.
Thank you. Our next question comes from the line of Ramesh Jain, an investor. Please go ahead.
First of all, congratulations, Dr. Chava, for the excellent set of numbers. My question is, regarding CapEx, sir, how we are planning to finance? Either it will be by way of debt or by way of internal accruals. And my second question is regarding gross margin and the operating margin. Are these margins sustainably going into future?
We do both internally and then, if needed, debt. That's how we are going. We are not thinking on any dilution on the CapEx funding side. The gross margin, Dr. Satya last time indicated 55 to 60% gross margin. I think we are.
If you look at 6-7 quarters earlier, we used to say gross margins will be around 50%. And then as and when the business mix is changed, we said it will around 55. Now we are saying it is closer to 60. I think that's a good sign as the business matures. Our clinical programs moving into commercial programs, we strengthen our leadership position in ARV and oncology. Things are looking better. Yeah.
Right, sir. Thank you very much, sir.
Thank you.
Thank you. Our next question comes from the line of Varun Chaudhary from ICICI Bank. Please go ahead.
Yeah, hi. Thank you for the opportunity. My compliments on a great set of numbers, sir. So my question is, before I ask the question, I would like to get back into the past first. The thing is that 2 or 3 years back, that asset turn for the company was pretty high, was close to around 1.5, and it went right down to around 0.7. Today, it is around 0.9. I'm just wanting to understand if you could give me some color on how the future on the asset turn looks like.
Our average asset turn was 1.1 for 5 years. That's what we are guiding, and 1.4 was the peak asset turn in 1 year. So first our aim is to reach 1.1. That's how we are progressing from 0.7 to 0.9. We already progressed. We are expecting to progress from 0.9 to 1.1 over a period of time.
Okay. Still we are in a growth phase. So we continue to invest aggressively in CapEx, and we need at least 2 more years where our return ratios will improve closer to 25%. Yeah.
Right. Thank you. That was question number 1. The question number 2 was around the manpower and attrition, not related to the presentation, but otherwise important for any business. So the leverage on capital, human capital, there is a lot of competitive intensity, what I'm given to understand, around pharmaceutical companies, particularly based down south. How are you looking at the attrition and the well-being of employees at your organization?
Our attrition is in a lower range of teens, and we have a lot of novel things we have adopted over a period of time of inducting post-graduation in the fourth semester, etc., that we are managing. So we are also planning to have a skill development center to help other people, other industries, and also pharma and Vizag. Then that will improve. So we say you are right. The skill is a challenge. Recruitment is a challenge, but we never faced the challenge. We are getting people.
Okay, thank you.
One point I would like to add is that the last 5 consecutive years, we are recognized as a great place to work. So that also 6 years in a row, great place to work consecutively. That shows we are a good employer.
Right, sir. Thank you.
Thank you. Our next follow-up question comes from the line of Bharat from Quest for Value. Please go ahead.
Thanks for the opportunity again. My question is to Dr. Satya. So, sir, whenever we put huge greenfield capex, especially, we went through significant operating deleverage. So, for example, EBITDA margins fell to 14% around 2 years back. Of course, the gross margins were good, but the EBITDA margins fell to 14%. At that time, we were a small company doing huge capex. Hence, EBITDA margins were volatile and were significantly hit. But now we are transforming significantly into larger and more resilient company. And also the product mix is tilting more towards high margin CDMO. So my question is, do you think once this future greenfield capex of 5,000 crores comes online maybe in FY28 or 29, will it again cause huge operating leverage and hit EBITDA margins like in the past and make EBITDA margins volatile like in the past? Or do you think we will become a significantly bigger and more resilient company, and then this greenfield capex of 1,000 crores per year should be easily absorbed by our numbers and should not impact EBITDA margins like in the past?
I'll answer. I think, Bharat, in the earlier cases, it's not the greenfield which has lowered the EBITDA. Actually, it is a new business areas wherein whenever we selected as greenfield, that causes the EBITDA lower. For example, when we started a formulation, we could able to hit EBITDA for at least 3 years because it is a new area. One is investing in OPEX as well as some kind of an development expenditure. So I think we will, as your question has an answer, I think you will also have the size also can absorb this kind of 1,000 crore, which will be maybe 15% of our 10 to 15% of our overall asset investment, which can absorb. It will not have a significant impact.
Okay, yeah, thanks, sir. It helps.
Thank you. Our next question comes from the line of Vishal Daga, an investor. Please go ahead.
Hey, hi. Am I audible?
Yes, sir, you're audible. Please go ahead.
Hey, congratulations on a great set of numbers. I have a couple of questions. One, we recently got to know that there was, a breakthrough in the HIV drug with a $40, jab that can come for the, developing nations. Does that impact Laurus in any way? It is going to get, I think, rolled out in 27. If it does, is there any way we are going to mitigate the impact?
See, the drug is for prevention, not for the treatment. So we don't expect any materialistic impact in the near to medium term because of the PrEP market.
Got it, sir. Just one more question on the Laurus Bio. We saw a good uptick this quarter. What would be a steady state run rate that you're targeting from an capacity expansion perspective for, say, 27 or 28?
New capacity will come online by end of 2026. That means next to 5-6 quarters, we don't see significant ramp up. Marginal growth will be there, but no significant ramp up in revenues will come until end of 2026.
Got it, sir. Thank you so much, sir. Congrats once again. That's all from us.
Thank you. Thank you. Our next question comes from Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
Sir, just a couple more. How much investment we are doing in this facility for genes and ADC facility, which is expected to be completed by CY26?
We are investing both OPEX and CAPEX put together next 3 years, about 250 crores.
Next 3 years.
Yeah.
And this is like principally, this would be like once we build the facility, we'll then sort of try to get the contract from the prospective customers.
Yeah. Yes.
Okay. And just on animal health.
One thing I would like to add, Tushar, here, all the expenditure on CGT, on pre-operative expenses and R&D, everything is expense. We are not capitalizing single rupee out of it.
Sure. So how much of that would be like for first half, 26?
As I mentioned, next 3 years will be about 250 crores of CAPEX and OPEX.
And sir, on the animal health, the earlier commentary was that this the site is undergoing validation for one commercial asset. So broadly, if this converts to a commercial success, then how much of the capacity will get utilized for this asset?
Sorry if I was not clear enough, Mr. Tushar, in the previous comment. There's multiple product validations that are ongoing in the animal health site, with one of them being commercially supplied as we speak. But there's multiple different projects or APIs that are being validated as we speak.
Understood, sir. And when this validation related business would also be coming, right, at this point of time within the animal health segment?
That's correct. As soon as the validations are complete, we'll be able to invoice, of course, the material and the service related to that. But significant amount of the revenues would actually come when the commercial supplies would start. But there will be certainly some addition from the supplies of the validation quantities itself.
Got you. And just to extend on this, so while you might not indicate current quantum of business from animal health segment, but considering the timeline for this validation, so when do we see meaningful pickup in the animal health segment? Broadly at a portfolio level?
We expect animal health revenues to contribute meaningfully or continue to grow over the next financial year and going forward.
Understood. Thank you. That's it from me, sir.
Thank you. Our next question comes from the line of Gaurav T. from Antique. Please go ahead.
Hi, good evening and festive greetings to the team. Just a couple of questions. So firstly, on the CDMO, Doctor, you mentioned that this quarter we saw higher contribution from commercial supplies. So do we expect this mix of commercial to clinical supplies to stay at Q2 levels for the rest of the year as well? Or do we expect clinical supplies to go up again in Q3 or Q4?
We're not giving a specific indication on what those numbers would look like, but at an overall year level, we expect to post a growth over the last year, certainly. But as you are aware, CDMO business tends to be lumpy in terms of how the revenues are come through. But nonetheless, we're seeing a good, healthy growth, when you look at the year in totality.
But your observation is right. There will be more commercial late stage and commercial supplies. That will continue. Yeah, we are not giving a proportion of sales, but it will continue to be like that. Yeah.
Sure, sir. Thank you for that direction. Couple of financial bookkeeping questions. So we have seen higher other income this quarter. So would that be largely driven by forex income this quarter?
Yeah. Yes.
Okay. And we saw a lower significant debt repayment in 1H of this year, and the finance costs were also lower in Q2. Given our operational cash flows were significantly higher and should be higher in H2 as well, can we expect more debt repayments in the second half of next year, of this year as well?
No, we are not expecting that. But interest cost reduction also helped through an interest rate come down.
Okay. That's helpful.
Okay.
Got it. Thank you, sir, and all the best for the rest.
Thank you.
Thank you. We have the last question coming from the line of Malhar Sanghvi from Bodhi Capital. Please go ahead.
Hello, hi, sir. Can you hear me?
Yeah, a lot of disturbance. Right.
Is it better now?
Yeah, go ahead.
So congratulations firstly on a great set of results, and I want to know your views on the MFN policy, which means that the prices of drugs wanting to come down in the US, and what kind of effect will that have on the outsourcing by the global pharma companies?
No impact.
So there will not be a positive or negative impact at all to the companies itself. I'm not talking about us specifically. What will the outsourcing impact be in general?
It is difficult to predict. We can say about our revenues are not impacted by that.
Okay, sir. And one more question. I'm sorry if I missed this, but this new acquisition which you've done called Arvic Therapeutics, so what part of ADC manufacturing do they have expertise in?
They have expertise in both conjugation, payload, linker, conjugation, purification, and then fill finish. So they don't make maps. They outsource map manufacturing.
Right. Perfect. That's great. Thank you so much, sir. Thank you.
Thank you.
Thank you. Ladies and gentlemen, I now turn the conference over to the management for closing comments.
Yeah, thank you all the stakeholders for interesting questions and your keen interest on Laurus Labs. Thank you.
Thank you.
Thank you. On behalf of DAM Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.